Ever wondered what a Bitcoin ETF is and how it can impact your investments? Let's unravel this financial jargon and dig into the exciting world of Bitcoin ETFs. An ETF, or exchange-traded fund, is an investment fund that you can buy or sell on a traditional stock exchange. It's like a basket of securities tracking the performance of an underlying asset. The underlying asset can be anything from a group of stocks to a commodity like gold. Now imagine replacing that gold with Bitcoin. That's right, Bitcoin, the digital currency that has been making headlines for its roller coaster ride of value. This is where a Bitcoin ETF comes into play. A Bitcoin ETF is an ETF that tracks the performance of Bitcoin as its underlying asset. Simply put, it allows you to invest in the performance of Bitcoin without actually owning any Bitcoin yourself. This is a relatively new concept in the investment world. In fact, the U.S. Securities and Exchange Commission, or SEC, has only recently given the green light for the trading of Bitcoin ETFs. This approval has opened the doors for sponsors like BlackRock, Invesco, Fidelity, Grayscale, and ARK Invest to start trading these ETFs. This development is more than just a new ticker on the stock exchange. It's a significant step in recognizing cryptocurrency as a legitimate asset class. It's a move that increases the adoption and credibility of Bitcoin and other cryptocurrencies in the financial market. Now that you know what a Bitcoin ETF is, let's delve into why it's a game changer for investors. Stay tuned as we explore the significance of Bitcoin ETFs, their impact on retail and institutional investors, and what they could mean for the future of crypto investments. So why are Bitcoin ETFs such a big deal, you may ask? Well, their significance lies not just in their novel structure but in their potential to reshape the landscape of cryptocurrency investment. Bitcoin ETFs, or exchange-traded funds, essentially provide a bridge between the traditional financial world and the burgeoning realm of cryptocurrencies. By tracking the performance of Bitcoin, these ETFs offer exposure to the cryptocurrency's value without the need to directly own it. This innovation is crucial in increasing the adoption and credibility of cryptocurrency as an asset class. Think about it. The world of cryptocurrencies, with its decentralized nature and complex technological underpinnings, can be a daunting space for many investors. Bitcoin ETFs, however, simplify this process, offering a familiar and regulated path to crypto investment. But the significance of Bitcoin ETFs extends beyond simplifying investment. With their approval, we're seeing a major milestone in the crypto market's maturity. It's like the market is graduating from its wild, rebellious youth, stepping into a more established and recognized phase. And recognition brings attraction. The introduction of Bitcoin ETFs is expected to lure significant capital inflows into the market. This is because these ETFs provide a safer and more regulated way for individuals and institutions to invest in Bitcoin. As a result, we can expect a broadening investor base and an increase in the liquidity of Bitcoin, potentially leading to more stability in its price. In essence, Bitcoin ETFs are not just another financial product. They are a significant step in the maturity of the crypto asset class, opening the door for wider participation and setting the stage for the future of crypto investment. With Bitcoin ETFs, cryptocurrency is no longer the fringe asset it once was. It's now stepping into the mainstream financial spotlight, ready to play a significant role in portfolios worldwide. But how does this impact you, the retail investor? Let's break it down. Bitcoin ETFs, or exchange-traded funds, have unlocked a new avenue for retail investors. You see, traditionally, if you wanted to invest in Bitcoin, it would involve setting up a digital wallet, understanding blockchain technology, and navigating cryptocurrency exchanges. This process, while rewarding for some, can be quite complicated and daunting for others. Enter Bitcoin ETFs. They offer a more straightforward path. By investing in a Bitcoin ETF, you're essentially buying shares in a fund that tracks the performance of Bitcoin. It's as simple as buying and selling shares on the stock market. This ease of access is a game changer for those interested in dipping their toes into the world of cryptocurrency, but who might have been put off by the complexity of direct investment. Another great benefit of Bitcoin ETFs is that they provide exposure to the value of Bitcoin without the need for direct ownership. This means that you don't have to worry about the safe storage or potential theft of your Bitcoin. Your investment is managed by regulated asset managers who take care of all the technicalities. This can be a significant advantage for retail investors who want to avoid the risks and complications associated with owning Bitcoin directly. Furthermore, as Bitcoin ETFs are traded on traditional stock exchanges, they come with the added benefit of being subject to the same regulations and protections as other publicly traded assets. This regulatory oversight can provide an additional layer of security for retail investors, further enhancing the appeal of Bitcoin ETFs. In a nutshell, Bitcoin ETFs have opened the doors to the world of cryptocurrency for everyday investors. They've simplified the process, reduced the risks, and made it as easy as buying shares on the stock market. And what about institutional investors? How do Bitcoin ETFs affect them? Bitcoin ETFs mark a significant shift in the landscape of cryptocurrency investment, particularly for institutional investors. You see, these investors are typically large organizations like banks, insurance companies, pension funds, and mutual funds. To them, security, stability, and regulation are of utmost importance when making investment decisions. Historically, the volatile nature of cryptocurrencies coupled with a lack of regulation made Bitcoin and other digital currencies a risky proposition for these institutional investors. But, with the advent of Bitcoin ETFs, the game is changing. Bitcoin ETFs offer a familiar and regulated structure that institutions are accustomed to. They operate much like any other ETF on traditional stock exchanges, tracking the performance of the underlying asset, in this case, Bitcoin. This allows institutions to gain exposure to Bitcoin without having to directly own the asset, bypassing many of the complexities and risks associated with direct cryptocurrency ownership. But there's another key aspect to this. The approval of Bitcoin ETFs by the U.S. Securities and Exchange Commission, or the SEC, gives cryptocurrencies a nod of credibility. This regulatory approval enhances the legitimacy of Bitcoin as an asset class, making it more appealing to these institutional investors. And here's where it gets interesting. Institutional investors control vast amounts of capital. If even a fraction of this capital flows into Bitcoin ETFs, we could see a significant surge in the value of Bitcoin. This potential for major capital inflows from institutions could very well be a turning point in the maturity of the crypto market. So, in a nutshell, for institutional investors, Bitcoin ETFs offer a regulated path to crypto exposure, a path that could lead to a seismic shift in the world of cryptocurrency investment. So, could Bitcoin ETFs be the future of crypto investments? As we delve into the future of crypto investments, it's clear that Bitcoin ETFs could play a pivotal role. This is largely due to their potential to dramatically increase the accessibility and credibility of cryptocurrencies as an asset class. Bitcoin ETFs could be the catalyst that propels the wider crypto market into the mainstream. By providing a regulated and more familiar investment vehicle for both individual and institutional investors, Bitcoin ETFs could drive significant capital inflows into the crypto market. This could, in turn, enhance liquidity, reduce volatility, and ultimately boost the overall market capitalization of cryptocurrencies. However, with these opportunities also come challenges. While Bitcoin ETFs may streamline the investment process, they could also expose investors to the inherent volatility and risk associated with the crypto market. Moreover, as the crypto market becomes more accessible, it may also become more susceptible to market manipulation and speculative trading, which could potentially destabilize the market. Additionally, the future of crypto investments is not solely dependent on Bitcoin ETFs. Innovations in blockchain technology and the development of other crypto assets and financial products will also play a crucial role. Keep in mind, the crypto market is not a monolith. It's a dynamic and rapidly evolving landscape, teeming with opportunities and challenges alike. In the end, the future of crypto investments will likely be shaped by a combination of factors, including regulatory developments, technological advancements, and market dynamics. And while Bitcoin ETFs are a significant addition to this mix, they are not the only determining factor. Only time will tell if Bitcoin ETFs will revolutionize the crypto investment landscape, but one thing is certain: they are a monumental step in the right direction. So there you have it, a comprehensive look at Bitcoin ETFs and their potential impact on your investments. We've unpacked the world of Bitcoin ETFs, investment funds that track the performance of Bitcoin, trading on traditional stock exchanges. They provide you with exposure to the value of Bitcoin without the need for direct ownership. The significance of Bitcoin ETFs cannot be understated. They signal a major step in the maturity of the crypto asset class and are expected to attract significant inflows of capital. For retail investors, Bitcoin ETFs open up easy access to the crypto market through regulated asset managers. Institutional investors, too, stand to benefit greatly, as Bitcoin ETFs provide a regulated and familiar structure for investing in this volatile yet promising asset class. As we look to the future, the approval of Bitcoin ETFs by the U.S. Securities and Exchange Commission is seen as a catalyst for increasing the adoption and credibility of cryptocurrency as an asset class. Remember, the world of investments is always evolving, and staying informed is key to maximizing your returns. Until next time, keep investing smartly.